We want to bring in Dan Newman. He's Future Group's chief strategist. We also have Stacey Raskin. He's Bernstein's managing director and senior analyst. Great to have both of you. Stacey, what do you think? How worried should we potentially be, or how worried should big tech be about this development?
I'm not that worried. I think there were a few things that have caused panic over the weekend and clearly in today, right? I mean, the headlines, the initial stuff, the takes that came out basically said, oh my God, they've duplicated OpenAI for $5 million. They did not duplicate OpenAI for $5 million. We can go through why. Number two, I don't want to discount the models they built are fantastic. They really are. And they've pulled a number of levers on efficiency that are great. But what they're doing is not miraculous either, or unknown to any of the other, top tier AI researchers or AI labs that are out there. The training efficiency and everything else that they've done, it's very explainable and kind of obvious if you look at the types of model structures and everything that they're using to build this. Long as it was not a crazy thing, and I don't think it's unknown to anybody else. And then finally, you got to ask yourself, like, is this good or bad for infrastructure? I am not of the belief that we're anywhere close to the cap on compute needs for artificial intelligence. You have to remember, I'm a semi guy. I view cost reduction as a good thing. For 50 years, every 2 years, costs in semiconductors got cut in half. It wasn't a bad thing for semiconductor man. It was a good thing for semiconductor man. And so I'm of the belief that, like, if you're freeing up compute capacity, it likely gets absorbed. I mean, you have to remember, costs were going up to do this training, everything like 10x a year, like for the last several years. I mean, that's not something that you can keep doing. We're going to need innovations like this if you're going to be able to keep things going on a trajectory. And so I actually think it's overblown. I understand why all the panic is going on. It's going to create a rich tapestry for debate as we go forward here. But I actually think it's overblown. I actually didn't think that this is necessarily bad news. I don't think Deepseek is doomsday for AI infrastructure. And Dan, like, I don't know what your opinion on this.
Well, Stacey, I initially gave Nvidia shares a hold rating in late February 2024. I cautioned investors about the cyclicality of the industry and said they should anticipate Nvidia to be up against fierce competition from companies like Advanced Micro Devices that have been developing their own AI GPU solutions. After Nvidia's Q1 results and somewhat underwhelming market sentiment for the following quarter, I revised my thesis in August 2024 and upgraded the company's stock to buy. However, my most recent rating was neutral, since I thought Nvidia would have little opportunity to meet analysts' lofty expectations, which might indicate peak growth rates and profits. The stock of Nvidia is currently down more than 11% during the pre-market session, which is one of the steepest declines I have seen in recent years. The market is examining Deepseek's impressive performance across several benchmarks and probable pricing, which is causing a decline in demand for Nvidia's GPUs. Even before the trading day began, the Nasdaq 100 index was down 4%, giving the impression that the market was in a true panic. However, I don't believe that Deepseek is a major concern for Nvidia investors. On the contrary, it seems likely that Nvidia's chips enabled the Chinese initiative to succeed. Given that American large IT companies are attempting to counter Deepseek's dominance among LLM models, I would actually anticipate increased demand for Nvidia's products. More processing power will be needed, increasing the demand for Nvidia's GPUs. Since there doesn't seem to be any proof that Nvidia is having problems as a result of Deepseek, I advise you not to panic. The US stock market is currently declining as I watch my screen because a leading long language model, or LLM, from the Chinese AI startup Deepseek outperforms models from American tech behemoths like OpenAI, Meta, and Anthropic. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Dan, as we're thinking about this too, with all of the mindset around what OpenAI has been, what it is right now, and where it's continuing to grow, it's not like we weren't expecting more entrants into the marketplace and more competition. So what makes DeepSeek different? What's the significance of this platform or this language learning model that is outside of the realm of belief for so many who are already operating in this industry?
Yeah, from a technical capacity, the way they were able to use reinforcement learning to use less tokens to be able to train such a large model and be able to replicate such consistent or high quality outputs in many cases, some of their outputs are actually very interesting, was really interesting, and I think it did create shockwaves. I am in line with Stacy. I've been on a bit of a tear across X. First of all, when did we decide that we're going to just believe a paper that comes out of China? There is a continuum of thoughts here, but there are leaders like Elon Musk and Scale AI CEO that have basically come out and said they probably have 50,000 H100 GPUs, maybe more. And so it's not obvious right now that everything they're sharing is exactly accurate. And it's not unlike China to potentially try to play a little bit of psyops with Americans and the markets to see how we would react. I think the progress is good, though. As Stacy said, look, if we can get this Jevons paradox thing where we get more compute, it's not going to stop and people aren't going to be like, we need no more. What's going to end up happening is companies are going to move faster. And I'll make one more point, is that ultimately we've looked at the possible bubble around AI, around too much cost on CapEx and not enough consumption or revenue generated by these ISVs, platform companies. Well, guess what? If we can create models more inexpensively, if we can use compute more efficiently, these SaaS providers, the Salesforces, the ServiceNows, the Microsofts, those companies that we're saying they're not driving enough revenue, they'll be able to build their models cheaper. They'll be able to create solutions with less overhead expense, and they're going to drive more EPS. So I just think the market's completely missing this one. And the fact that we're believing China just with their word, to me, I think that needs a little more inspection.
According to the news, the Chinese startup spent less than $6 million developing their R1 model utilizing the open-source Deepseek v3 technology. The billions of dollars that U.S. corporations invest on comparable developments contrast sharply with this. Even more intriguingly, Deepseek's models are significantly less costly to operate than OpenAI's, with a 95% difference in cost per million tokens. This is probably making investors reconsider how much money U.S. businesses spend on AI research. Since Nvidia has been a major player in the AI investment space for the last 2 to 3 years, I believe it draws the most unnecessary attention. On the surface, it could appear that Nvidia has earned its current position of pressure. This is because there are concerns over the need for costly hardware for cutting-edge AI development, because some reports indicate that DeepSeek was built using Nvidia's less sophisticated H800 chips rather than the company's flagship H100s. The Chinese business claimed to have used 2,048 H800 GPUs for a total of 2.78 million GPU hours over 57 days. Once more, this is significantly less than the computational resources that many AI companies now employ to train LLMs. The H800 is a version of the H100 made especially for the Chinese market to adhere to U.S. export regulations. Therefore, I must admit that it isn't inherently less sophisticated than the H100. According to third-party sources, it has various limitations when compared to the H100, especially in terms of chip-to-chip communication speeds, but its fundamental processing capabilities for AI training are comparable. Therefore, regulatory concerns forced the development of DeepSeek employing H800 chips, which is unrelated to Nvidia's lack of innovation in its H100. The model would function even better if the Chinese corporation had the opportunity to implement the newest Nvidia chips in large quantities. We're not positive, but they might have done so in some way. I'm attempting to convey that rather than the technology itself, a large portion of this is due to the engineering prowess of data scientists and engineers. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Does that all shift that longer-term narrative surrounding efficiency, surrounding spending?
No, I mean, we need efficiency. So, I'll go back, at the Hot Chips conference a couple of years ago. Hot Chips is like an emerging chip conference. They have it at Stanford every August. And I think it was 2 years ago, NVIDIA's chief scientist, Bill Dally, gave the keynote. And he was talking about, in this context, it was GPU performance improvements. But think about that in terms of compute improvements. And he was talking about how, over the prior 10 years, they'd improved GPU performance by something like 1,000x. And it was a variety of things. Some of it was process tech. Some of it was lower numerical precision. Some of it was sparsity and architectures and all these kinds of things, but 1,000x. And what he said is over the next 10 years, we want to improve it by another million X. Again, if you sort of have a view of where the compute requirements need to go to achieve some of the things that everybody in this industry wants to achieve, we need efficiencies from wherever they're going to be coming from. And so, no, I don't think it changes that long-term like narrative. And in fact, we've even seen this. You have to remember, Deepseek started to release like the V3 model, not the reasoning model, but the chat model came out in December. Like this is not new. And even just last week when all this was coming out, we got a number of data points that clearly show, at least at this point, spending is going up, not down. So Meta significantly increased their CapEx. We got the whole Stargate announcement, $500 billion, like fine. Even China announced it was like a 1 trillion RMB. It was about $140 billion US AI effort that they're going to be putting into place. And so clearly right now, I think spending is still continuing to accelerate. I don't think that this has to stop that.
Since NVIDIA's processors are unquestionably the best available today, the release of Deepseek is a hardship for LLM developers rather than those who manufacture the hardware that powers the LLMs. Deepseek, in my opinion, will lower the bar for admission into the field of AI development, which may encourage researchers and smaller businesses to get involved, but make it more difficult for people who previously relied on their superior abilities to get in. As I read through the numerous stories about Deepseek's disruption of the AI market, I can't help but believe that, as a new competitor, Deepseek will force more established AI companies to improve their tactics in order to maintain their dominant positions. Businesses will probably now spend even more money developing AI hardware infrastructure, which will only help NVIDIA as they update their antiquated systems to keep up with technological advancements. They will probably require additional chips to expand the capabilities of their model, even if they do not replace the antiquated systems. NVIDIA is currently selling at just 28.2x and 22.4x of the price-to-earnings multiples for FY 2026 and FY 2027, respectively, if the current consensus, which hasn't been updated since Deepseek's news, is accurate, and the business will in fact increase its EPS with a CAGR of 14.3% for the next 6 years. Compared to the multiples I had to contend with when examining the stock in my earlier films, those multiples are significantly less expensive. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Lastly, while we have you, Dan and Stacey, you're welcome to answer this very briefly after Dan, but for investors that have been trying to figure out where the dip buying opportunities are and have been waiting for a dip, this seems like a pretty massive dip that we're seeing here going into the open. Should investors feel comfortable buying in on some of these names with this dip?
The secular trend isn't changing. And so AI, I see this as an opportunistic moment. Like I said, I actually think some of the second and third network effects that have come up, but not as much direct ability to ascribe value from AI. So I look at the SaaS players, I look at some of the platform players and the cloud players that have been making big CapEx spend. Jevons paradox. I think we're going to see more demand. We're going to see more interest. I think companies can move faster and they can drive EPS expansion. So I'm not bearish on this at all. And while people are extremely negative, the FinTwits are going crazy, I think calmer minds prevail. And we also, like I said, Brad, we need to investigate all of this sort of data here and make sure they've really done what they've said with what they've said. But I think we're in a good position. I don't think this is a long-term dip.
Yeah, Stacey, quick comment.
Yeah, I mean, look. So everybody's always looking for a dip. Like we've got a dip. Like we haven't changed our views on any of these stocks. This doesn't change it.
Dan, Stacey, thanks so much for taking the time ahead of the opening bell here. Appreciate it.
Therefore, in my opinion, there is nothing negative happening with NVIDIA at the moment. Rather, I see the Deepseek announcement as an indirect tailwind that the market appears to price differently. Investors should be contrarian and view the recent decline as an intriguing buying opportunity, even though I didn't think I'd say that about NVIDIA so quickly. In spite of the aforementioned situation, I believe that NVIDIA is the real winner from the developments surrounding LLMs. Regardless of whether Deepseek will completely upend the AI industry, it is obvious that NVIDIA's GPUs will continue to be in high demand, regardless of how much more potent a recently released LLM model is than its competitors. Now is the time for other major tech companies like Microsoft, Google, and Meta platforms to be concerned. To compete with the Chinese competition, they need buy more Nvidia products. During the pre-market period, I advise upgrading Nvidia to a buy during this significant decline.